Hey everybody, welcome back. Welcome back. Yeah, AI is great, isn't it? It's no big deal, no big deal. Hey, I can do more with AI than I can mess up more with AI than you can do with a pen and pencil, I'm sure. Anyway, welcome everybody. Sorry about the delay. The computer apparently installed updates since the time I got here. So that was cool. I had to log everything in and get it back up. And welcome to the show. Looks like we have a pretty good crowd here today. Patrick, Infinity, Rex, Don, Sergio, Alan, Larry, Dan, Goose, Francois, Ted, Donald, Craig, Rick, Aaron, Svinborn, Rosalind, Mary, George, Jorge, Laura, Cliff, Gary, Eric, Harry, Jason. I'm kind of skipping around here. Doris, and welcome everybody. Chris, Maurizio. Sorry if I skipped your name. That was a lot of names. And hey, how did everybody do on Memorial Day? Everybody celebrate something good with friends and family? I mean, of course, respecting and observing and thinking about those who have given the ultimate sacrifice here. Kimberly took a trip, visit her dad. And well, that's cool. Not muted for some reason. Not hooked up to my headphones apparently. Somehow disconnected. Everything just going that way. And I made ribs el pastor, however you say it. I don't know. I'm not a Texican. Anyway, 2-day process. I started on Sunday. Blended rehydrated peppers. Mixed it with pineapple and orange juice. Crushed pineapple and orange juice, and let that marinate on the ribs overnight. Cooked it yesterday afternoon, and there you go. Those were pretty interesting. I never had anything taste like that before. Pretty darn tasty. Not a barbecue sauce. That's a El Pastor. Well, it's like a pepper blend, and quite tasty. I'd do it again. Anyway, if you made something special, barbecued, whatever, let me know in the chat. Or if you're watching this later when I'm no longer live, leave a comment down below. Let me know how you did and what you did. Yeah, I did them on my Rectech. Oh man, it's so good, so good. And I got that Rectech back in February. Probably, it's just an amazing piece of equipment. You just dial in the temperature and just let it go. And I cooked them about 200 degrees for an hour and a half. Bumped the temperature up to 350, wrapped them, cooked them for another hour and a half, threw in baked potatoes. Freaking delicious. Freaking delicious. Anyway, like I said, if you had something awesome on Memorial Day weekend, any day this weekend, let me know in the chat. Love to hear you, or leave a comment down below. Thanks. That would be awesome. I love food. I like to eat. I don't know. I mean, I like to eat. I'm not a big guy, but I do like tasty stuff. I like to always try stuff new too. Always trying new stuff. So, all right. Got free data from Ninja Trade for 5 days. Complaining the paper trade is not free after 14 days. Yeah, well, it's kind of the way it goes. So, all right. Moving on. So, can the Bulls continue this thing forward? So far this morning, looking like maybe we're going to have a bullish day. Maybe we're going to take it higher again after that little lightning there on Thursday. Look at the chart here. Yeah. So Infinity, I use AMP Global for my futures stuff. I find I do pay for like $35 a month for data. So anyway, don't have a paper trade account really. So, but Tasty gives you futures data for free, and Thinkorswim gives you paper futures data for free. Although I guess it's probably delayed on the paper account. I don't know. I haven't messed with it since it switched over to Fidelity or whatever. Anyway, right here, getting a little green, and it's been kind of flat since we opened on Sunday. Just kind of turned around. I was talking about this yesterday morning, how we opened up and just kind of sitting flat right there on Sunday when we opened. We just kind of been churning, drifting a little higher, but it's been pretty flat right there. Not really going anywhere. Now, that doesn't mean there's no list. There's definitely a list, and it's quite long today of stuff that was moving pre-market. We'll talk about it here in a minute. But kind of uninteresting, I guess you might say. And Bitcoin took a rally yesterday and then taking it all back this morning. Kind of crazy. Took a nice pop and then took it all back right away. We hold the higher low. That'd be good. I don't know. Well, I guess I'm on the... let's see here. Yeah. Rallied yesterday. Took it all back. Bouncing potentially off of that same trend line. Right there. And that's even with the futures. If we go to the cash in the spot market. Yeah. Lower highs, higher lows. That's a watermelon seed squeeze. Low on my list of favorite patterns. As in, there's not much stuff I dislike / hate's a strong word, but I hate this pattern. I really don't like this pattern. This is unreliable, and it's highly likely we're going to get a move, at least this big, right here, either down or up, either way, once we get to the end of this thing. So Bitcoin, highly likely to keep chugging in this till we get over here. So probably the rest of the week, it could just sit here and do nothing, and that's pretty crap. But then it's going to pop or possibly drop. And that's not what I like to see when I'm trying to take advantage of a monthly pattern. So, I don't know. There's nothing clear right there on Bitcoin. So, just throwing that out there. I like AMP Global because they have like $50 margins on one micro contract. So $50 in your account, you can go long on ES or short ES. So if you're trading the full contracts, I think it's a $500. Maybe it's $100. I don't know. Anyway, moving on. SPX right here. We'll find out what happens when that opens here in a few minutes. Probably going to pop a little bit based on the futures, but I don't know. We'll see. Daily time frame here, just it's the stocks above the 50-day, just kind of hanging right in the middle of the chart. Let's turn off the log mode because this is just an oscillator. Oscillates between the bottom and the top, and we're working on going back to the bottom. That's what this chart indicates to me, is that we're going down here. Sooner or later. It doesn't mean we won't take another run at the top first, but sooner or later we're coming down here. This is where we're heading. We could pop up here before we do it, and it could take us out a little ways, but I think sometime sooner or later we're coming right down here. S5TH, stocks above the 200-day. This is a much slower moving chart and continues the rollover. There is a head and shoulders pattern right there that could, while same situation, this is just a big oscillator. Patterns are patterns, and that could play out, and we could drop pretty severely on S&P 500 stocks above their 200-day, and then the 20-day. Watch out. That's probably topped out with a lower high and probably oscillating its way back to the bottom. That doesn't mean we won't make a higher high in the S&P first, but be careful out there. Definitely be careful out there. And speaking of be careful out there, all trading involves a substantial risk of loss. Past performance not necessarily indicative of future results. I may never get another prediction right again. None of these patterns I've said so far, or we'll talk about later today, may ever come true. Now, the presentation right here is intended to be informational, educational, fun, and entertaining. It is not a recommendation to be buying or selling any financial instrument or anything else. Don't buy stuff from me. Don't buy stuff from anybody else. Don't buy stocks. Don't buy options. Don't buy bonds. Don't buy Forex. Don't buy futures. Don't buy cryptos. Don't buy treasuries. Don't long them. Don't short them. Don't trade them. You may experience substantial risk of loss. All right. If you desire personal financial advice, like what am I supposed to do? You got to hire and consult a financial advisor that can tell you what to do. That's not what I do. I'm not registered to give the personal trading advice. So don't ask me, please. All right. I got to take that other slide out of there. Anyway, calendar for this week. Yesterday was Memorial Day. Today is the day after Memorial Day, Tuesday. And we got some consumer confidence coming out at 10 o'clock right there after the market opens. And the market opens in like 3 seconds. And then 30 minutes from now, we'll get that consumer confidence hitting the market. Maybe do something, maybe not. And here goes my alerts kicking off like crazy. And on Thursday, we've got preliminary GDP. Wednesday is kind of benign. Unemployment, preliminary GDP price index, pending home sales at 10 o'clock on Thursday. And then Friday, well, that'll be a big show. So we kind of got the bang bang going on Thursday, Friday. Thursday, we get the GDP. Could it make the market roll over? Quite possibly. That could be the excuse. All right. The charts are definitely fully cooked on the upside. So watch out. There's definitely risk to the downside. And then we get PCE, personal consumer expenditures, on Friday at 8:30 in the morning. And then welcome to June. Welcome to June on Saturday. Craziness, right? Absolute craziness. Absolute craziness that we're already through May. Wow. Where's the time flying this year? I don't know. Thanks for being here, though. Thanks for coming and watching me each and every day. Thank you all for being here. Like the video, subscribe, interact with the video, share with friends. That's how I keep doing this and support my family. It's because viewers like you, as they say on PBS, that I'm able to keep doing this. So coming up in June there, we've got ISM right there, manufacturing on Monday next week. We got JOLTS, job openings on Tuesday. We've got, oh my goodness, overnight, that's Canada. Finals, we got services PMI. Yeah, services PMI on Wednesday. Thursday, unemployment claims as usual. Trying to look for, and there's jobs report, and there it is. Treasury report right here. This currency report. That's one. They have been dropping that after the market closes, and there's been some interesting developments in there. It's kind of like the money supply report and where we're spending money, the treasury currency report. Now, it's interesting. So the Fed is kind of keeping rates high and tightening. But at the same time, the Treasury is writing a lot of short-term notes and buying them themselves, which adds liquidity to the market. It's kind of, they're kind of at odds with each other. Who's pumping more liquidity and, who's doing what? Are we sucking money out? Or are we actually pumping money in? Right now, the Treasury is actually pumping more money in than the Fed's taking out with the higher interest rates. So the Fed's discouraging consumer behavior, but at the same time, the Treasury is encouraging all this banks and all the encouraging banks to do trades and stuff like that. There's more money flowing into money markets than we've ever had. It just keeps on going. And I don't have charts to show you. I was looking at this stuff over the weekend though. And speaking of Fed rate cuts and stuff, Fed rates period. Check this out. I did bring another chart and I want to show it to you. And let me pop this over. Look at this. It's a little hard to see. I know. I don't have a better chart. So the orange lines that are on here are predictions. That's the historic forward pricing in the futures market for the Fed funds rate. Right there. Nerdy stuff, I know. Nerdy stuff. So these are forward projections. You can see they're pretty horrible at getting it right. Look, all the way from back here in 2008 when we hit the bottom, all these forward projections in the futures pricing. Look at that. When they talk about the rates are priced in, rate cuts, I mean, look at this. We were pricing rising, and it went faster than the futures were pricing. That's what caused some problems. Now, ever since we got right in here, they've been pricing a drop off, and we just kept rising, and we've been holding flat right up here. So that's the futures market. What they're pricing in right now, very heavily. You know, lots of futures price action priced in right there, but maybe we keep going higher. So be careful out there. You see back here, we actually went faster. So the futures market is not necessarily accurate at all for predicting how the Fed's going to behave here. Down here, the market kind of projected we were going to keep flat, and look at that, we ramped off right there. So I don't know. And all the way up here over here, we were projecting going down as the rates climbed, and then we're going to hold steady, and we dropped out. And so, yeah. So when mainstream media talks about the price predictions, the things that are priced in the market, rate cuts priced in the market, it's usually pretty inaccurate as far as what we're actually going to do. And you can see back here, the futures pricing, and we plummeted out right there. That was COVID, but futures didn't see it coming right there as far as the Fed funds rate futures. I find this chart extremely interesting. That's why you got to follow the price patterns, not just watch what the futures are pricing in. All right. Dun, 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 dun. Moving on. Get back to it. Look at that. That one closed out. BA 175 taken off. Beautiful. I sold a credit spread right there at 170. I did a 160, 170 credit spread. I did it on Wednesday for Friday, and then I rolled it out 2 weeks for $200 more credit, or 200 per contract. I got 2 contracts. So, I mean, that's pretty sweet. And if we bounce up and hit the target that I'm expecting, this is actually a really fascinating pattern here. Look what we did. This is a measured bounce. Why was I willing to chase after that? It was like free money to me selling the Wednesday spread for Friday, although I guess it was Thursday I did it when we were dropping here. As we started down, yeah, it was Thursday. Excuse me, not Wednesday, it was Thursday when we were dropping. I sold the Friday, picked up a few bucks. On Friday, I rolled it out 2 weeks, collected 200 more bucks. And that thing's going to print some money, it looks like. That's a measured bounce. I would expect this to potentially break through the roadmap line here. Beautiful dreamer, come back to me. Right there. Yep. Potentially going to go break the roadmap line on Boeing. That's what I would expect. This zone right up here is where I would expect the target to be. This is the resistance right there. So, got to clear that, of course. If we can clear that, probably cruising right up in here at the minimum, if not going on up here to 216 above that. And that could go fast, or it could take us out into the later summer to get up in there. We could do more of these corrections along the way. But Boeing likely I'll give it maybe 60% odds that this was the low. And that the news and everything coming off of Boeing over the next 6 months is going to start looking better and better. It's going to take a while. But I think the news coming off of Boeing is probably going to look better and better as we move forward. And we have the potential for a large outsized upside. Possibly up to 600. Wouldn't that be crazy? Think about that right now. The way everybody thinks, trash talking Boeing, and then it could be like a triple just on shares from here, that'd be pretty wild. Maybe even more than a triple. So, just saying, it's going to take a while though. We're talking years down the line. Not, this is not going to be December. This is going to be like 2030. Going to take a little while. Anyway. Alrighty. Moving on. As I said, future's kind of flat. Russell, getting a little retrace here. Can I explain a credit spread? Not in this forum. This is not the right forum. I have a class called the Versatile Trading Workshop that I do spreads. I mean, basically, you sell an option close to the money. This is a high level. Investopedia is your friend here. Sell an option close to the money. Like, let's go look at one really quickly. NVIDIA. You'd sell, like if you're doing a bull put credit spread, you go down under here, you'd sell like 1100 put, and then you buy something lower down to protect you, like a 1075 put. You'd get a credit for that because the higher, the put closer to the money is worth more than the put further out of the money. You take a credit. And conversely, a bear credit spread, you'd sell, like if you're sure that NVIDIA is not going over 1150, you'd sell the 1150, buy like a 1175. So you'd sell that one, buy that one, get a credit, and you'd be fine as long as NVIDIA doesn't blow through your spread. Now, there's all sorts of other caveats to this, but and then if you combine both a bull put one and a bear call one, puts and calls together, if they're the same width, that's called an iron condor. And so if you think something's going to go flat and not move, you could do that, but gets in a whole realm of possibility. But then you're trading 4 options in one trade, and you rack up costs really, really quickly doing that sort of stuff. So why did I do a credit spread on Boeing? Is because I didn't have the cash to do a naked put. Didn't have naked put selling cash, which would have required me to be able to buy 170, 100 shares at 170 price, so $17,000. I didn't have $17,000 sitting in the times 2, because I did 2. That's $34,000 I would have had to have sitting there to buy the shares. Didn't have it. So I did credit spread instead, and not too shabby. Maybe not as lucrative as just selling the naked put, but working for me so far. So far, so good. If we blast down through 170, I got problems. That's why I got a bunch of alerts sitting down here. And there you go. That was the short version of credit spreads. There's a lot more to it than that. So please do your homework. Don't just go willy-nilly testing that out. Definitely paper trade if you've never done a spread before. Never done a credit spread or a debit spread. Debit spreads cost you money. That's when you buy the one closer to the money and sell reverse the operation on the options. That's if you think it's going to go on down. Like if I thought this was going on down, I could have bought a 170 put and sold a 160 put to reduce the cost of the 170, but then I limit my money. Now, on a credit spread, you limit your profit to whatever the credit is, but your risk is the full difference between the spreads. So be careful out there. Spreads are not necessarily my favorite trade. I just like long options at this point. Long options, long shares. That's probably my bread and butter stuff these days. Liking shares a lot more, especially since I've come up with some high probability patterns like this market roadmap bounce situation. Started building a list of 3,600 tickers. Look at this. Got a full ATR list. I pulled every ticker has an ATR greater than 25 cents. That means it moves 25 cents per day on average. That's 3,600 tickers. I'm working on getting through this and building a list of daily tickers, daily setup tickers. So far, that market roadmap pattern I talk about all the time, 74% of the time on the 850 tickers I've done so far, 74% of the time it works out. That's pretty strong. That's a high probability pattern. Like I talk about, I still got a lot more tickers to go. I'm only a quarter of the way through. So I don't think it's going to change drastically. I've already done A, B, C, and part of the D tickers. So keep it on trucking. And NASDAQ, lower high so far. There's the target. Be a shame to miss it at this point. S&P is still having a lot of trouble breaking out. This gives me caution. We could just do one quick spike and reverse. And that could happen on any news this week. Could happen on GDP, could happen on PCE, could happen on nothing. So be careful there. That Russell, circling back around to it. 618 level right there. If we hold below that 2100, could easily come on down. Test that zone around 2000. We break below that, and it's game on for going lower. And you may be like, JT, how do you trade Russell? IWM right here. IWM. All of these have like ES. Unfamiliar. ES is the futures for S&P 500. That's SPY, SPX, XSP, SPXL, SPXU, SPXS, all those S&P 500 tickers. ES right there. Why do I watch the futures? Because they trade basically 23/6. 23 hours a day, 6 days a week. NQ is NASDAQ. That's QQQ. All the QQQ stuff. TQQQ, SQQQ, all the QQQ, all the NASDAQ things right there. That's NASDAQ. And you may be like, well, the numbers are crazy compared to QQQ. Yeah, you just divide this by 41. NDX is the index that goes with NASDAQ right there. Russell here, RTY. That index is RUT right here. And that's IWM and all the Russell. There's a whole series of Russell stuff. You can go Google it if you're interested. And so there you go. Why do I watch those? I feel like these three indexes kind of give me the gauge of the market. Why not the Dow? Because the Dow's so manipulated. All right. The number one weighted stock in the Dow is like United, which right now healthcare is not even like a major player in the market. So how does that even make sense? ES is S&P 500. It's 500 companies, a pretty broad swath of the medium and large cap companies. It's kind of the gauge of the market. That's basically what I look at as the market. NQ, top 100 companies right here. These have been up like 14 the last 15 years or 13 the last 15 years. They've been green for the year. That's pretty strong, right? This is our strong, this is the strong ones, all right, out of the list. And then Russell, this is 2,000 small to mid caps. And these are the smaller companies. This is where 85% of the population works. All right. So when they talk about, everybody says, well, the economy is good because the S&P is at all-time highs. But when we look at the Russell here, we're not even close to all-time highs. We're actually kind of churning. And this is why most business and people in the country feel like everything's crappy because we've been just chopping sideways for years and years here in the Russell. I mean, look, all-time highs are way up here. Way up here. 2460. And we're down here at 2083. Yeah. So that's 85% of the country works in companies listed here. So that's why we're all feeling tough, feeling the crunch, right? Sales. These companies aren't necessarily performing great. So that's when you're just talking about how everything's hunky-dory and you just look at the NASDAQ 100 or even just the Magnificent Seven, you're ignoring most of the rest of the country. Oil here. Yeah, go, baby, go. Get out of here. Break through that resistance. So we've got resistance right there, the head and shoulders. I deleted that last week and it popped back on. Cool. Save that. That's not a head and shoulders because we made a lower low. Could that be the reversal? It tagged my target right down there. Tagged the top. Look right there. Look right there on Friday. Tagged it right there. Right there. Right there. It tagged it. And then we reversed strongly with a green candle close. Big strong candle today. If we get through the roadmap line, that's the first gold star. We get through this downtrend or uptrend line right there. That's the second thing I need to see. And then we're probably heading right up here. Second check mark, gold star, box, whatever. And then we're probably heading right up here to 83. If we get through that level right there, all clear to head up to 90 right here. So that's beautiful. Hey, by the way, coming up at 5 p.m., I'm doing a request show tonight, 5 p.m. Eastern. Make sure that you put it on your calendar. Come see me. Make sure you're subscribed. Make sure you hit the bell with the notifications. Come see me live then. And we haven't even gotten into what's moving today. Gold, nice reversal there. I'd like to see that continue. That was a nice place to potentially bottom. Not sold, but we got to get back up through that resistance right there. If we get back on the upper side of that, we're probably taking on off on gold. So back through 23.95. Bitcoin just churning. That can turn around quickly, but sitting on that. I don't like to see it sitting on that trend line. That downtrend of highs. We got on the upper side of it. I want to get off of that. I want to get away from that to indicate we're going on higher. If we get back below it, below this low we made on Thursday, things not looking so hot for Bitcoin in the short term. Ethereum, just chopping around a little bit, getting a little retrace here this morning. Those spot ETFs were approved, and actually, come to find out, the reason this took off here is that the news leaked that it was going to be approved to people that were in the know. They bought the crap out of it, and then the rest of us find out 2 days later. Dollar load. There we go. Sitting on the roadmap line. That looking weak. If we break below that, coming on down to the 90s is more than likely where we're heading. NVIDIA, well, it's got targets all the way up through here. We're kind of sitting right in here at that target zone. Next one up, 1250. Not far away. Can NVIDIA become the biggest company in the land? That's what it looks like we're going for. It's not that far away. Only about another 140 points. 150 points. Can we do it? I don't know. Came all this way. It'd be a shame to not go ahead and reach for it. I'm talking about this and this right here. And, Microsoft has climbed a little bit, so it's going to take a little bit more than 1250 to get up to the top. Not far. It's gunning for Apple right now. Microsoft not far away. And this is just infinite market cap right here. You can go to 8marketcap.com to look at the whole list. This has got everybody. And maybe like, well, so-and-so should be on that list. Well, this is market cap, not stock price. The stock price has nothing to do with your market cap. Well, stock price times your shares that are outstanding is your market cap. But share price is not how these are ranked. These are ranked by market cap. So you got to multiply that share price by the number of shares outstanding and get the market cap. So that right there, there's been a misunderstanding the last couple of weeks on that. I just want to try and clear that up. So how does gold have a $16 trillion? That's because every ounce of gold, estimated that we have out in the world times the $2,400 per ounce gets us a $16 trillion market cap on gold. And then silver, obviously way lower, and Bitcoin, that takes the 21 million, well, roughly 21 million Bitcoins that are out there, times the $66,000 per Bitcoin, gets us to 1.37 trillion. Silver's kind of pulled ahead, and Bitcoin kind of sitting here. So, dun, 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 dun. Moving on. INSM, that's a crazy pop, and I wouldn't have expected that, actually. It did. I mean, it's like a big time frame bounce. Looks like. Let's check out the weekly chart. Yeah, that's just chat. I would never have played that. Never, never, never. If you play it, good luck on you. Good on you. Be careful. It's likely to retrace again. I mean, look, every time it pops, we get a retrace. So that's another pop. Highly likely to do another retrace. Be careful. And ASML, pop back down, get back closer to where we are. That one into the danger zone. Watch for resistance on the upside. Next move down, like it looks like it wants to come down here. Came up shy, hitting the roadmap line. Now, if we get above that, above these highs we had from on the way down, tips the odds we're going on up. Those targets like 1100, possibly 1180. But as long as we're below this zone, or even in this zone, watch out for that. It's the more likely path. I would not trade for it, but I usually like to try to pick up the pieces when we drop. Cattle, that's cat L. Interesting. I either mistyped it or... Not sure which one that was. That's probably not anything that I want to look at. SMCI. Probably also, this is very much like that ASML chart. ASML just a little bit higher. This one's struggling with that zone right there. Indicative that we may roll on further down. Please be careful. Don't come crying to me. We could come all the way down here to 400, possibly even retrace the entire move up off the consolidation from last summer, back in the 200s. Party could be over on this one. All right. This is, if you've never seen this before, we're hanging out right here. All right. Look, this looks a lot like SMCI. And if you've never seen this before, it's not just Palm Beach research. You can go Google market psychology or psychology of a market chart. You'll get this chart a 9 gazillion different ways. All looks very similar. Everybody thought they were a freaking genius on SMCI. Now everybody's saying we just needed to cool off before the next rally. I mean, I've literally seen mainstream media writing that. Literally seen articles saying that, like published articles in mainstream media. Watch out, watch out, watch out. All right, watch out for the retrace. We can retrace the entire thing back. Please be careful. That looks exactly like that chart. It may take a while. Could be out here late in the year before we get down here. Please be careful. NVDX, leveraged NVIDIA. Going for the target, 149, possibly 182. CRWD. That's set to go on up. 387 area. Dell, reach for the sky, baby. Beautiful. Beautiful move on Dell. I don't know how high it's going to go. I don't really have any expectations. Yeah, maybe 227. Could go even crazier. AGIO. Dun, 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 dun. Nice pop there. That's a pharmaceutical. I don't play biotech pharma because they just do crazy stuff because of the FDA. Food and Drug Administration in the United States just kind of announces stuff and it makes these things pop or drop unexpectedly. This one's at the target, so I would kind of, if you're playing my patterns on this, now would be time to book profit. But biotechs don't always follow my patterns. China stuff doesn't always follow my patterns because they don't play by the same accounting rules. Low price stuff, things happen to low price stuff that is hard to predict. And then leverage stuff. Leverage distorts the patterns that you would normally find on the underlying. So when you look at my patterns on a leverage chart, it doesn't always work the same way. CORT, it doesn't mean I won't use them, but when all you got's a hammer, everything's a nail. But it doesn't mean that my patterns are going to work. So that's a downtrend on CORT. It's another biotech, pharma, medtech, FDA involved. ARCT, popping in between. Sitting there at the 618 level. If we clear that on the daily chart, 46 would be the upside target potentially. That's a biotech pharma. Again, lots of those hitting the list today. Oh, look at that. My S&P 500 breakout strategy says the S&P is breaking out to the downside. QCOM coming up into the zone. Right there, I did expect a retrace and then potentially a push higher. USD is the not US dollars, but ultra. I mean leveraged. All right. When you see ultra on here, that just think leveraged semiconductors. That's right up at the target. Be careful. That could be indicating we're getting cooked. SOXL. That one's still lagging. SOXX. That one's still lagging. Interesting. FSLR. Wow, that one's just going absolutely nuts. Absolutely nuts. Next target up 295. Duolingo. Potential bounce. Like that's, we can get, let me pull that down. I did expect an extension, but and as long as it's below the roadmap line, we may get that extension. If we break back above, golly, it left that giant gap down. That's sucky, but so there's a giant resistance right there on the gap. Number one. Number two, we're going to move up through this 224 area. Could be heading up here to 273. NVDU, Ultra. That's another leveraged 2x leverage on NVIDIA, crushing it right up into the target. 92, be careful. We could be approaching the end. United States Cellular. 51 would be the upside target. Came up just shy. Well, got really dang close, but came up shy. LABU, that's 3x. So this is leverage on biotech. Like talking about playing with gasoline and matches. Like, and this is, it's done a breakdown, retesting, holding that downtrend. If we start below this box right here, it's game on for coming down here in the 20s again on LABU. GME popping a little bit over the weekend. Load. Apparently everybody's looking at GME. There we go. Potential for this to be a bounce. If we get below the roadmap line down here at 15, 16-ish, 15, 16, it's probably game over for this cycle on GME. But if we hold this and bounce, we could easily be coming back up here. Easily come back up here in the 50s. The pattern possibly supports some crazy numbers. I'm not even kidding right now. If this pattern carries through, we could do something ridiculous. Ridiculous could be even like 300. But I mean, I have 12 shares, so 12 shares. Not playing big here. And this could be all over. This could just retrace it and be all done. ANET. That hit the target. Retracing. Next target up 348. Or we could go hit the roadmap line again. CEG just keeps climbing. That's doing an exponential thing. Be careful. Not unlike GME. If it starts, I mean, not GME. Not unlike SMCI. We start coming back down and chopping around. Watch out for it to retrace back out. Doesn't have to. I'm just saying, be careful. All right. What goes up, straight up, usually comes straight back down to and consolidates for a while. Builds up the energy again before we can do some other move. Yeah, see how we went straight up and came back down and then going up again. Even though this is a 2x long, this is leverage yet again on NVIDIA. That upside target, 62 up there, not far away. EETH, Pro Shares, this is futures for Ethereum. Sitting right here at the resistance, still at the resistance, still have not cleared that zone right there with a daily close above these highs over here and that gap down. Still in the danger zone for a reversal. That reversal could take us lower. Still very cautious on Ethereum. Now, if we can do the bullish case, get a nice green daily close up here, probably coming on up to 97 to 100. FANG. That one looks like it wants to roll right back to the roadmap line right down here. Be careful. EMPH. Downtrend line of highs. If we can break through that, targets are up here, 158, 176. TDS, just kind of chopping here. Not very strong. Nothing for me. VST just keeps going exponential. Where's the high? I got nothing, no way to say like that. Exponential can keep being exponential. I mean, that's pretty nuts right there. Pretty nuts. Some point, that's probably going to retrace some of that move back out. Apple moving pretty nicely. It's pretty much set up the target. While we are in this resistance zone, if we pop above that prior high from right back here in early January or late January, we pop above that high, probably set the odds to going up to 208 at the minimum, if not 220 above that. SMH is at the target. That's another semiconductor ETF. Could we extend to 260? Absolutely. VRT. That one just keeps climbing the fib ladder. 113, 128. And probably has a date with the roadmap line at some point. Hadn't been down there since May of last year. So they don't go up forever before they come back and visit. Kava. Going on extensions. That one's probably going to come back at some point also. Airbnb came back. Working on building some support here. That high, that low. That's 50% retrace. That can propel it much higher. Could be talking 174, 178, 188. But we got to get above that 618 first. Got to fill that gap. Left the gap resistance right there. Need to fill that gap back through before we can go long. Before it's a high probability. GLOB. While it was on the poppers list, that looks pretty horrible and looks like it may be heading for further decline here. Possibly down to 120. CLS. Rocking it on higher. Absolute insanity on these moves. Absolute insanity. And maybe 63, 66. Hadn't visited the roadmap line since back here in June of last year. It's probably due a retrace. Be careful out there. Be careful. GDXU. That's a leveraged 3x on gold. Miners. Remember, gold and gold miners are not the same play. I mean, they're related. It's like cousins, right? They're related, but might get something totally different. If you go mixing them, you get some crazy results sometimes. So be careful. That one right there looks like it wants to tap the roadmap line, but we can easily get an extension because of how far down it was beat down. So this can reverse very quickly here. This is leveraged, and that's a reverse split. So this is a declining asset. Be careful on that one. Be careful, be careful. MU, probably going for reach for the sky right there. Probably heading for my target up here between 135 and 160. That's where I expect resistance to be met on MU at some point. PPLT, Platinum Shares is just in the chop fest. While we've been rallying, it's showing we're meeting some resistance. We've turned down so many times before, all the way back to 2021. Please be careful. MSTR on the biggest droppers list. First one on there, and looks like it's mostly recovered here. This is hyped up. If you haven't heard me talk about this before, this is hyped up. It is not leveraged Bitcoin. It's moved like leveraged Bitcoin, but it is not leveraged Bitcoin. And we may see this return to normal while Bitcoin continues higher. FLUT, probably heading on down. SEC, probably retracing back to the roadmap line at the minimum. It could hold the prior high. That's another point where it could hold. Get my trend line right here. Could hold that high and move higher. So it could find support there. Could come back to the roadmap line and bounce, or it could head on down here. This looks kind of corrective in nature and would lead me to expect, and with this lower high, that we may push lower down to this $20 area down here. You know, $20, $30 area. DAC. Nice pop off the roadmap bounce. Up through all the targets. Be careful. That one's probably going to retrace at some point. DKNG. Almost back to the roadmap line. Oh, it did. It went through it. Ha. Just got to zoom up. Beautiful. Beautiful, beautiful. All right. That retrace right there. Yeah, we tagged the minimum requirement. This could be the end of this retrace on DKNG. seasonality wise, DKNG usually retraces at the end of basketball season, I guess it is. You see April, you usually get a big drop. April, usually get a big drop. April, that one started a little early, and then we rallied, and then got a drop right there. Not a long history on DKNG, but we're kind of in the devoid of sports betting until, was it another 97 days, 96 days till football season starts, something like that. So could find a bottom in here and rally into football season. GCT, if you believe in that kind of thing, I'm just saying, if you believe in that kind of catalyst. GCT found resistance, turned down. That could be the bottom. Move back up through here, could set us up for 50 on the upside. Tesla, still in the chop fest here. Still expect this to drop on down into this 160 area. Just not showing me it's being strong here. I want to see that drop. I'll probably, if we drop in this zone and hold support right there, I'll probably buy back my leveraged longs. Especially if we turn back higher again. So I just need one little flush, a bounce, and I'll probably leverage long again on Tesla. NVDS dropping out. That's leverage on the short for NVIDIA, which at this point, short NVIDIA is stupid. It just is. And, you know, how high can it go? It can go up a long, stupid way. And betting short against it, not the best play right now, especially in a leveraged. ZS, right down to the box. Thought we'd tag it. We tag the top of it. Can we push on into it? That's the next question. So that was where I expected us to find a bottom in ZS. NVO. Looks like that wants to retrace to the roadmap line at some point. NVO and LLY both have kind of paradigm shift drugs with the GLP-1 drugs. Print money could just keep going higher. DEO, getting close to the target at 130. Just getting lucky. MRUS popping up here. Retracing off that pop from Friday. Watch out for the drop back down to 39. And that's the list. So expectation for today. I'm cautious, man. Man and lady, kind of expect us to pop that. We came up just shy of that 1272 on the S&P. And look at that. We tagged my target zone and retraced right back down. Found support at the breakout level. That's where we made these highs before. Right? Retested it, moving back up. All signs would indicate we're probably going to do this. And if NVIDIA goes and be the biggest company in the world, that would kind of support that right there. Now, is that going to happen today? Probably not. Bias for the day is just caution. Like, we could chop in here and pop and drop and all sorts of stuff. I don't really have... This low is the important low. If we get below this low, it's probably game over on this rally. So set your alert right there. Just below that low right there, like 52.50-ish. I mean, yeah, 52.50. We get below 52.50, probably not going higher for now. As long as we stay above that, probably game on for going higher. Now, today, we could just chop sideways. There's not a lot going on. So make sure you come back, see me at 5 o'clock. Like I said, I'm doing 30 minutes of your requests. It's the only time of the week I do requests. Make sure you come and see me. Can't do the show without you. Thanks for coming, everybody. If anything I said was helpful, beneficial, give me a thumbs up. Make sure you let me know in the comments down below what your favorite dish was you made on Memorial Day weekend. Have a great day. I'll be in Discord.